What is up, my beautiful, lovely people? Welcome back to another YouTube video. In this one, it's going to be a trade recap of the trade that made me 6 bands. 6 bands. Let me pull up this picture. You always got to show up with proof. $6,734 received in crypto after a $6,738 payout. So I got scammed by $4 by this broker. I'm just kidding. This is the Bitcoin fee. Broker always pays, and I am blessed to be trading with such a beautiful broker, which I'll link in the bottom. Besides the point, welcome to another video. I'm going to be breaking down this trade and what went into the trade, some of the sauce that you guys probably weren't aware of. Now, a lot of you guys are so stuck on the lower time frames. And over again, I realized just how much it limits you guys, because I'm getting like a lot of questions of like, how do I trade the 15-minute time frame and all this stuff from new people. And it does irritate me a little, but I have to be patient and remember that a lot of you guys are just starting off, and you have a lot to learn. Now, what actually went into this trade started from the monthly time frame and the seasonal narrative. I've been using it a lot recently, and especially in the start of each month, it's going to be very important to me to understand where the month is headed. So just hopping onto the charts here, as usual, gold, that's what I'm analyzing, that's what I'm trading. If you guys don't trade gold, it doesn't matter. The concepts that I trade are general, like universal to any pair, any time zone, any session is what I'm trying to say. It's universal. You just have to learn how to adapt and implement it into your pair. Another thing, it always opens to Oanda. I think that's just because like what my bookmark is set to. But do not use the Oanda charts if you're trading ICT concepts, because it's not an accurate representation of the gaps and what happens inside of these charts. A lot of people like take trades anyways, and then tell me that the Oanda charts are the reason why they took the chart or the trade, when I may have been looking for like the market to fill a specific gap or create a lower low, or prevent a candle with no wick from forming. And Oanda will typically do those things, but it's not the accurate chart. It's not the accurate chart for value gaps or whatever. So I do not recommend you guys trade it. You do not look at this for ICT like concepts. It's gonna throw you off more than it will give you a good setup. I promise you guys that, because I've traded it for the longest time. It was the chart that I used until I realized that it was right there. That thumbs down right there. I don't know how that popped up. So let's hop onto the actual charts, forex.com, and break down what went into me taking this trade. So starting off from the monthly chart, and we're still in a really high probability area to take a really good setup. And the reason why that is because this month's seasonal tendency is, where's my, I should have came a little more prepared. There it is. This month's seasonal tendency, June, for gold, is going to be bearish. Okay, so if we hop into the charts and look at what's going on the charts, this monthly candle expanded like absolutely crazy in the start of the month. It expanded towards buy side. It absolutely flew up. And if we go down to the daily, you'll see this first candle of this month. Right, Friday, Monday. Yeah, there you go. So this first candle was an insane bullish move. And what I learned from this bullish move is the fact that just the same way that I look for that wick on the daily time frame, for my model, I look at that wick before I take a trade for the daily expansion. We look for the wick, then we get the IFEG, and we catch the expansion of the daily candle towards whatever direction it is. The same thing applies to every time frame, and that's why I'm telling you guys, like, the stuff that I trade is universal to any pair. It's universal to any session. As long as you get that like wick and you know where the daily candle is expanding, you can take the same setup. And it's the same thing on the monthly time frame. And what I realized is this big candle that ran up was essentially the monthly candle creating a wick before it moved in the true direction. So here's the open, right, of the month. So anything above this open is the highest probability area for you to get into a trade towards sell side. Now, I was in really good trades yesterday and earlier this week. Why did I close it? Because we're still in a high probability area. I like taking money off the table. And honestly, I don't have the psychology yet to hold like trades that long. Honestly, in the future, I'm going to be opening up separate accounts and just like holding those trades on that separate account with lower risk so I can just like forget about it. Because I feel like that's going to make me a ton of money. I typically have the higher time frame narrative locked in most of the time, like super accurate. But I close the trades anyways because it's a lot of money on the table and I like taking that money off the table. But anyways, back to this point, anything above the open, if this monthly candle is going to end up as a bearish candle, is going to be a super high probability area. So going into those sells, what I was expecting is, look guys, we have NFP on Friday, right? My trade, the $6,700 trade, was on Friday. It was on Friday after NFP, like late into the session. I think it was like 2 p.m. In Eastern time. So it was a PM session trade. And I was looking for a continuation of the move that NFP started. And the reason I was looking for that was because we didn't move all week. And we didn't move all week because of this daily bullish IFVG right here. And what I just realized is like, hey, we kind of have yet to correct this huge, like, unusual Monday's range, which just absolutely expanded towards buy side, like literally 800 pips in a single move. And I was not upset that I missed out on this trade because it was on a Monday, it was during a bad week, and I didn't know where it was going, honestly. From this point on, it was in the equilibrium of this range, and I just didn't know where it wanted to go. Now I'm more confident because now we closed below a daily IFVG, and we're likely going to expand towards this weekly low, which is also the open of the new monthly candle. And then we're going to proceed to expand towards sell side. And the reason why I'm looking for this expansion is because this month's seasonal tendency is to be bearish. The next thing that I would be looking for is closing below this weekly fair value gap right here. So this is going to be my next draw on liquidity. Once we start moving towards sell side, we want to see this taken out and then continuing lower and creating an IFVG. This would really show us that we're going to be moving lower in the month, June, and we can continue looking for sells. But as of right now, I hope you guys understand why, like what my narrative was. My narrative was that anything above this open right here of the new monthly candle is a super high probability sell. So if we scale down even more, you'll see there's so much confirmation that I saw that was pointing towards sell side, like right here. A bearish fair value gap that was respected, and to the left of that is a bullish fair value gap that was respected. So you can see that this bullish fair value gap was respected right here. It ran up from it, swept a liquidity point. And now when we started running down, we created an IFVG. This IFVG also overlapped with a regular FVG, right? And then it respected both of those when it came up into it, pulled back, and stayed inside of it. So already I was super confident in sells, and I just kind of regret not selling earlier. Like honestly, I would have had just, if I had sold from here, I would not have closed my positions at all. I would have held them through the close and the open of the new week, and honestly maybe held them until the end of the month. And that might have been a 100K trade. But I'm not upset because it's so clear to me now. Right then and there, it wasn't super clear. But now it's super clear now that we're likely going to be expanding lower and lower to create a bearish monthly candle. So that was my 4-hour confirmation. Honestly, inside of this range, all the lower time frame was super terrible. Like up until these 4-hour started getting respected, everything else was super terrible earlier in the week because, like I showed you guys earlier, there was that daily IFG that it was consolidating in. So my actual trade came in down here, and this still ended up in a 6K trade. So imagine if I had another 300 pips to work with, that would have been a lot of money. That would have been another 6K added on top of that. So let's scale down and actually break down what went into my trade. So obviously NFP, I didn't want to trade NFP, risky. On the 1 hour, I saw this bullish candle, came down below it, that became an order block. This other bullish candle became a propulsion block. And on the 30-minute time frame, this tapped into a 30-minute FVG, and all I was looking for was the move down to this right here, which is the weekly candle open, right? Basically below the monthly open. I wanted this monthly candle to at least look bearish. Like that's what I was expecting because this weekly candle has no wick. So I wanted it to come down and create a little wick on this and then expand lower next week. But I didn't get that target, and I closed my position in a 3308, which is a really good position. I literally caught the low on that. But it was simply because I was like, okay, we're about to close, So I didn't want to wait and it potentially pull back into this daily fair value gap because I wasn't sure. Sometimes it does pull back before it closes. But in this case, my trade was simple. It was very simple. Came from a 30-minute FVG. A lot of you guys are going to ask if I used confirmation in a lower time frame. I didn't because I saw that it was kind of rushing to get down there. We already had a little bit of a correction move. So this move back up into this FVG was a high probability entry in itself. And I just rode the wave down to my target. I ended up adding multiple positions. So once I got in, I added like another 2 lots. And I think my total position size was like 3.2 lots. So 3.2 lots, it ran down from 3326, like my entries, down to 3308, almost 3306, which is like a little under 200 pips. And that 200 pips ended up being like just around 5K profit on the 1,500 that I had in the account. So really great position, really great trade. And the reason why I was able to execute and even layer in multiple positions was because I was confident that we were likely to run to 3,290, which is that weekly low. And yeah, I caught a little piece of the pie. I didn't catch the whole NFP move. I still caught a piece of the pie and walked away in profit, and I'm very grateful to that. That was a $6,700 trade. That's a lot of money, and we started off the week of the first month, which is a low probability week, right? You don't want to be trading NFP. But we started off the first week of this month with $6,700. That's how much people make in the entire month. We started off the first week like that. And I wasn't even clear on where the week was going to go yet. Or where the month was going to go. Now we know where it's going to go. Last month I made $25,000. Just saying, guys, we started off this week pretty strong. Last month, I only started the first week off with like 4,500, which is still a lot, right? And then the following week, it was an 8,000 something. And then the third week, I don't think I made anything. And then in the last week, I made 12,100, and that ended up being a 25K month. I think we could push past that 25K this month. I'm looking forward to it. I'm ready to execute. I'm ready to step up on my goals and really hit like new levels. Thanks for listening. I'll catch you guys in the next video. Peace.